Big banks in Canada just announced that they made more money than they were expecting the very same day that the Bank of Canada, Canada's central bank, or the bank for banks, announced that they had lost a lot more money than they were expecting. And these two announcements are a lot more linked than you might think. A lot of what just happened has been happening over the past 2 years, but the sad reality is that while the big banks have made tons of money as a result of this, the average Canadian has lost $3,500 as a result. The big banks win and the average person loses. So let's talk about how the Bank of Canada has covertly transferred hundreds of millions, if not billions of dollars to Canada's big banks, and how that hits you in the pocketbook down the line. All right, let's get right into it, and make sure to subscribe to the channel if you haven't already done so to continue getting Canadian-focused updates just like this one. This is the earnings that were just released today from Scotiabank, and on this first line here, it shows the amount of income they made on interest, right? Anytime where they lend money and they're charging interest on that, how much money did they make? And over the past 3 months, they made $4,622 million just on the interest that they were being paid, and this is actually up roughly $400 million from the 3 months that happened last year at this time, where Scotiabank had earned $4.2 billion. It's no secret that interest rates are going up quickly as a result of the Bank of Canada's actions to try to fight inflation. This means that people who lend out money end up making more money when they're lending money for things like credit cards or car loans or mortgages. These big banks like Scotiabank, TD, or CIBC have actually been earning a lot of interest that they're charging to the Bank of Canada. The Bank of Canada is the one that's paying interest, and the big banks are earning it from the Bank of Canada. But how does all that work? In order to understand what's going on, you first need to understand what settlement balances are. It's super easy, and once you understand this one simple concept, everything else is going to make a whole lot more sense. Just like you have an account at your bank has an account at the Bank of Canada, and the amount of money that's held inside of your bank's account at the Bank of Canada is called their settlement balance. And just like your bank might do if you have a high interest savings account, the Bank of Canada has to pay interest on the amount of money that the big banks are holding at the Bank of Canada, an amount of interest on their settlement balance. At the beginning of the pandemic, in order to lower interest rates and stimulate the economy, the Bank of Canada decided to buy up a whole bunch of Government of Canada bonds, and they bought those bonds from the big banks, the very ones that have settlement balances at the Bank of Canada. And you can see that in the chart here. The green line is the amount, the yellow line is the amount of Government of Canada bonds that the Bank of Canada holds, and the green line represents the deposits of the members of Payment Canada. Essentially, those are the people who are able to have settlement balances. So as the Government of Canada bond holdings go up, so too does the amount of money that the big banks are holding at the Bank of Canada. This whole system is called quantitative easing, and there's some more funny business around QE that we're going to get into in just a minute, but the problem that the Bank of Canada is facing now is that the amount of money in these settlement balances that they have to pay interest on, well, the interest that they're paying, now that interest rates are higher, is a higher amount than the interest that they're earning from the bonds that they originally purchased, meaning the Bank of Canada is losing money. And they're losing a lot of it. Just today, the Bank of Canada reported that over the past quarter or 3 months, they've lost $522 million due to this discrepancy between the interest rate they're paying and the interest rate they're receiving. And the governor of the Bank of Canada was actually questioned about this whole situation just last week when he appeared in front of the Federal Finance Committee.
You talked about the bank's negative position. I just want to make sure I understand this properly. The bank is losing money because it has to pay interest on the settlement accounts, and now that the rates have gone up, the interest payments are greater than what the bank receives from the government for the bond rate itself. Is that correct?
Yes. So what we're paying in interest on our settlement balances, which are our liabilities, is larger than the interest we're receiving on our assets, which are largely Government of Canada bonds.
Okay, and who's receiving those higher interest payments? Those would be the large financial institutions that have accounts with the bank?
That's correct.
So the big 5 Canadian banks would be included in that?
Yeah, it's a bit more than that, but yes.
Okay, but they are included in that?
Yes.
Okay, and so they're getting paid more.
So now that interest rates are higher, the Bank of Canada is losing money, and all of the big banks that have settlement balances at the Bank of Canada are making money to the tune of $522 million over the past 3 months. But that's not the only reason things are coming out rosy for the big banks. Since the beginning of 2020 and all the way through most of 2021, the big banks were able to skim some money off the top of some questionable auctions that were held by the Bank of Canada. Now, there are two big parts of this, and we've already covered one of them. The Bank of Canada bought these bonds from the big banks, but originally those big banks bought those Government of Canada bonds from the Government of Canada. The only issue here is that the Government of Canada doesn't have the capacity to actually issue bonds. Instead, the Bank of Canada issues these bonds on their behalf. So we've got a situation where the Bank of Canada is issuing these bonds, selling them to the big banks, and then buying them back from the big banks almost immediately afterwards. And the Bank of Canada actually outlines this entire process in a recent paper they wrote called Settlement Balances Deconstructed. It's actually simpler than it looks. Here we can see the Government of Canada issues the bonds, but we know that's the Bank of Canada who's actually issuing the bonds, doing the sale of the bonds. So they sell these bonds to commercial banks, the big banks, and now those are listed as assets for the commercial bank. But then they decide, because they know the Bank of Canada is going to buy these up immediately, they sell those to the Bank of Canada, and those bonds are now assets of the Bank of Canada, and the liability here, or what the Bank of Canada pays the big banks for these bonds, is in settlement balances. So now we have new settlement balances in each of the accounts of the commercial banks. Now, not everyone was able to participate in this potentially lucrative auction system. You or I weren't able to buy Government of Canada bonds and then sell them at a potentially higher price right back to the Bank of Canada. Instead, the practice is limited to what they call government distributors and dealers. And yep, you guessed it, the list of distributors and dealers, government distributors and dealers, well, you might find some of these names familiar. Bank of Montreal, CIBC, HSBC, National Bank Financial, RBC, Scotiabank, TD Bank, all the Canadian big banks. And yet again, the governor of the Bank of Canada was questioned on this auction system in that same testimony.
When the bank was involved in the government bond purchase program, the bank was buying the bonds off the secondary market, but the government was selling them. As the bank was buying them, the government was selling them. Who sells those bonds into the market?
Well, we are the agent of the government of the Bank of Canada. The government issues the debt, so we issue it on behalf of the government of Canada.
So the bank was selling it on behalf of the government and then buying it back. When was the price identical between what the bank was selling the government's bond for and what they were buying it back?
The prices won't be identical, but they're pretty close because it's a competitive market. We issue, both of these things are run in competitive auctions. There's strong competition, so the prices are. Every auction is going to be a little bit different. Because of the competitive process, the prices will be close, but they're not going to be exactly the same.
So the Conservative Member of Parliament, Andrew Scheer, says, well, aren't you saying that the banks can buy up these bonds and they can know that they're going to be able to sell them to the Bank of Canada at a potentially higher price because they know that the Bank of Canada has this Government of Canada bond buying program? So Tiff Macklem responds that, well, there might be a little bit of a difference here, but it won't be that big because we've got fair markets and we use a competitive auction system to both sell and to buy these bonds, so the difference shouldn't be all that much. But in an excerpt from a paper that was actually written by the Bank of Canada, they suggest that these fair auctions might not be as fair as you might think due to something called an announcement effect. This is from a paper that was admittedly written a while ago by the Bank of Canada back in 1999, but it's called Buying Back Government Bonds, Mechanics and Other Considerations. And one important excerpt is that they're saying that, hey, well, we got to focus on the possible announcement effect that a reverse auction has on the secondary market price. There are a couple things to break down here. First, a reverse auction is the way that the Bank of Canada bought back the bonds, and they were able to say they did it at fair market price because they weren't the ones saying how much they were going to pay the big banks for the bonds. Instead, the Bank of Canada said, hey, here's how much we're going to buy, and you submit how much you'll sell it to us for, and we'll take the most competitive offers, the lowest priced bonds. The big problem, though, is this announcement effect because the Bank of Canada is saying, hey, we're going to buy all of these bonds, and this is the excerpt, with the potential arrival of a large bond buyer in the market, which is the Bank of Canada in this situation, the secondary market price of the announced bonds issued to be repurchased will tend to rise. So the bond price will tend to rise when someone announces that, hey, I'm going to buy up $5 billion worth of these bonds per week, which is the maximum amount that the Bank of Canada was buying at the height of their program. They say that the mere announcement of an intended repurchase of these bonds will tend to increase the price of the targeted bond in the secondary market between the time that they make the announcement that they're going to be buying so many bonds and the time that they actually hold the auction. Now, it's also important to know that when the price of a bond goes up, the yield or the interest that is paid when you're holding that bond goes down, right? This is sort of an inverse relationship that happens with bonds. So when we have the Bank of Canada announcing in 2020, early 2020, that they're going to be the buyer of last resort of these bonds, we're going to gobble up such and such amount of bonds per week and per month, well, then obviously the price of bonds will go up because they know there's going to be more demand. There's that announcement effect, and the yield on these bonds drops dramatically, and now we can see the predicament they've got themselves in, where these bond yields are starting to go back up dramatically. Interest rates are higher because the Bank of Canada isn't buying bonds anymore. There's not as much demand, so the price of bonds has gone down, and the yield on those bonds has gone up dramatically, which sort of cycles into the economy. Why the Bank of Canada is paying so much on their settlement balances. And that was actually the goal of the Bank of Canada, was to lower yields on bonds dramatically, because at the beginning of the pandemic, they thought, hey, nobody's going to buy anything. Our economy is kind of screwed. We need to stimulate the economy by bringing interest rates down, and the yield on these bonds reflects the broader interest rate that people in the economy pay. So if we lower interest rates, people will go out and spend all their money real quick and save us from a potential horrible recession at the beginning of the pandemic. But there are two side effects. The first one is that the banks can essentially flip these Government of Canada bonds right back to the Bank of Canada. And the second one is that, well, it's costing Canadians, average Canadians. You see, when the Bank of Canada was buying these bonds in the first place from the big banks, well, they didn't use any money that was already existing. Instead, they typed some zeros into their computers and increased the settlement balances that the big banks had at the Bank of Canada. This added billions of dollars into the Canadian financial system, and many people believe that this is one of the main drivers of the inflation that we're seeing today. More money in the financial system means more demand, means higher prices. In fact, in a recent interview of the governor of the Bank of Canada, he said that they estimated over the past year, inflation has reduced the purchasing power of average Canadians by roughly $3,500 over the past year, essentially a loss of $3,500 for every single Canadian. But at least there are some signs that the Bank of Canada is recognizing that maybe this entire system wasn't the right way to go in this situation, saying that when all of this is over and inflation is back at the central bank's 2% target, we're going to have a thorough review of how all of our tools worked throughout the pandemic. We didn't get everything right, but we got a lot of things right, but we have some lessons to learn. So that's how the big banks have profited, and the average Canadian has not exactly profited from the actions of the Bank of Canada over the past couple of years. But I'm curious what you think about all of this. Do you think that somewhere along the way the Bank of Canada made a wrong turn? Was it with that bond buying program? Or do you think that maybe that was necessary to make sure we didn't have a horrible, horrible recession, maybe worse than the one that I think we're in right now? Either way, let me know what you think down in the comment section. I read every single one and I try to get back to a bunch of them. And if you haven't already done so, make sure to subscribe. It takes a lot of research to put these videos together, and I appreciate your support on the channel. But with all of that said, thanks so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time.